nothing less than an entrepreneurial-driven tech revolution has been reshaping the world over the last couple of years in ways we could never have imagined just 10 years ago. Young, disruptive digital newcomers are seizing on technological change to challenge and break apart outdated business models across sectors and geographies. And the front line of this revolution is the financial services industry. According to a recent report, that in the Middle East alone has amassed over $100 million in FinTech startup funding in the past decade, as GCC countries look to diversify their revenues away from oil and establish themselves as dynamic FinTech hubs. In 2016, 105 FinTech startups were launched across the Middle East, which are expected to attract $50 million in funding by the end of 2018, and that is just 0.1% of a global industry that was worth an estimated $867 billion in 2016. So just what will be the impact of this scale of innovation on the traditional banking and finance sector? Payments, commerce, commercial and retail banking, insurance and wealth management could all be changed in ways that perhaps we can't even imagine today, as new, more dynamic competitors seize upon the advantages wrought by blockchain and cryptocurrencies, AI, big data, peer-to-peer lending, and more, all backed up by fundamental changes to regulations designed to increase transparency and open up banking. But with all revolution comes a certain degree of bloodshed. Just who will be the winners and losers in this digital transformation, both here in the GCC and also in the rest of the world? In 20 years' time, how will our financial system work? Will physical cash as we know it today still exist? Will banks in their current form still exist? Will all fund managers be robots? And what about national currencies? Will they have been usurped by crypto cousins? Just what will be the role of finance ministers and central bank governors in this brave new digital world? And yet, despite all these advances we've been talking about today in FinTech, it's still a fact that around 90% of payments in the Middle East are still made by cash or check. That's 80% of the world still use cash. So we're also going to try and answer the question of how technology can help with financial inclusion. Luckily, we have a panel of experts who are going to help us get to the bottom of these questions. We've got representatives from the world of traditional banking, the world of tech, investment, innovation, the world of cloud computing, and the world of IT and FinTech consultancy. Although I suggest you're all in the world of innovation because you have to at the moment. There's no choice. So before I ask everyone to introduce themselves, I'm going to put a poll up to get us going. We've got a couple of polls during this talk. The first of which I want to put up now, if we can, and then everyone can have a think about it. We'll discuss the results. So we'll wait. There we are. Which of these technologies will have the most fundamental impact on finance and banking in the next 20 years? It looks like blockchain is winning, followed closely by artificial intelligence. So we'll see how that changes as the debate goes on. So without further ado, I'd like my panelists, starting from the end there with Pavel, who's closely studying the results, to introduce themselves and give a little bit of a taste about what they do.
So, good afternoon, everyone. Pavel Stefanski. I'm working for IBM in the Middle East and Africa, responsible for introducing innovation and the latest technologies, including cloud, cognitive, and blockchain to our largest financial clients across the sector. So, working with banks, central banks, and also some of the insurance companies and other financial institutions.
Good afternoon. My name is Sue Lee. I run worldwide public sectors, financial services, including central banks, financial regulators, and the financial institutions for our cloud computing business.
Hi, I'm Hadia Fathallah, Executive Director for C5 for the MENA region. C5 is basically a technology investment and innovation firm, and our business largely in Bahrain is running an accelerator in partnership with Amazon Web Services, the Economic Development Board, and Tamkeen to help scale young businesses through the power of cloud computing.
Good afternoon. I'm Sahir Alwari. I'm the Deputy Group CEO of Bank EBC and the Chairman of AFS, which is the only regional FinTech enabler in the region. AFS owned by 30 banks in the region.
Thank you very much. Now, what I want to do today is launch a time machine 20 years into the future, and I want us to get out and I want us to look around and see what we find. But before we do that, can I open up by asking each panelist, why do you think this technological revolution or the momentum that it's gaining now, why is this happening right now? What is driving it? And if I start with Pavel at the end, and then we'll work towards me.
So, since I'm from IBM, I think I will start with the human factors and let the technology people speak on that separately. I think we've reached a certain level of maturity when it comes to, for example, knowing how to act with speed, how to do design right or better than we used to in the past, how to be agile in terms of developing new products, and that allows us to move with speed, which Mr. Aryan was talking about earlier, and allows us to be more flexible and experiment faster, fail fast, learn quickly, move forward. Another factor that I will mention is simply availability of venture capital funding to do all this experimentation.
So from the cloud computing aspect, I think there's a compression algorithm happening around technology. To go to parlay on what you said about failing fast, learning from it, and then iterating upon that. The cost of doing a startup, cost of doing a new business is far less expensive now when you leverage technologies and services like cloud computing, where a startup company used to be multi-millions of dollars. Rather, now you can start with hundreds of thousands of dollars and experiment to see if that works. So there's a compression algorithm happening within the technologies, but it's also going into the financial services sector.
I think in general we talk about a revolution happening in technology and FinTech, but I don't know if it's just happening now. I think it's been building up. There's been sort of an evolution towards this. But today there's a nice convergence of a number of different factors. For example, a nice intersection between FinTech and cybersecurity and cloud computing that really makes the time ripe for this sort of transformative combustion, I guess, in FinTech. There's also an alignment of other factors, for example, a growth of a global and even a local and regional entrepreneurial ecosystem. So the holding environment today is also right for the growth of FinTech. There is greater appreciation from the regulators and from the banks, for example. So all of this coming together makes the time now right for this. But I think it's been building up for a while now.
It's building up. It's all coming together now, so that's what's driving this momentum now.
Let me start. In 1996, Bill Gates, he said we need banking, not banks. What does it mean? We need services, we need customer experience. In 2008, everyone, all the banks and bankers and regulators were busy in the financial crisis. And banks were busy dealing with regulation, breaches, etc. That financial crisis created a gap within the customer experience and customer expectations. These gaps have created that new startup FinTech companies have taken opportunity and focused in building a new customer experience and customer expectations. We have seen newcomers, and we've heard this morning the aggressiveness of Facebook will become now the largest money transfer company in the world. We have seen also Amazon will start giving students loan. So this new startup which become FinTech companies have created a threat to the industry and banking. So why now is that the disruption of technology and the digital have created a new momentum in the industry where banks are starting, I don't want to say wake up, starting now taking the FinTech disruption seriously.
Well, their very existence is in question.
Exactly.
So that's why now. Let's get into our time machine. Let's go ahead 20 years. Let's get out of our time machine. Let's go to the coffee shop because we're thirsty. What am I going to be paying for my coffee with? Will there be any cash at all?
In 20 years, I don't know. I was telling Saul earlier about an experience I had when I was much younger and went to Epcot Center with my parents. And they had this ride of sorts where we were supposed to ride through the year 2000 and we were living on Mars and underwater. And it's 2018 and I still do things not exactly the same as I used to, but a good chunk of my life is very similar to it was 20 years ago, but a good chunk of it is very different from it was. There's things that I do on my phone that I couldn't have imagined doing. So I think we're probably going to be doing e-pay, which is what most people do in the US anyway when they buy coffee. We might be using, I don't know, things embedded physically in us, which is conversations that we already have heard people, where you'll just wave and the chip that's embedded in your
So
arm.
that's facial recognition and various
But
other.
I still think the world is a big place, and like you mentioned earlier, I think even the most countries, even the most advanced countries when it comes to e-banking, like France and Netherlands, still 40% of all transactions still happen with regular cash. So I think it'll be different, but I don't know if we'll be like blinking and buying stuff with our eyes.
So cash is resilient. The physical cash, people like it. It's a sentimental thing. So do you agree with that? We will still, in 20 years, be using cash a lot.
Yeah, I don't think so because it costs so much to create physical currency. Where if in the United States it costs more to actually create the penny than it's worth in the penny. And so I do believe that we will be a cashless society in the fullness of time. And I do think that there are other methodologies, and to make it, we are such a global and very transient world these days that if you think about me coming to Bahrain and not actually having to take out the local currency, instead being able to transact very seamlessly and the conversion already happening, whether it is on my credit card or whether it's on my phone.
Will you be doing that in a home currency, or will you be doing that in a cryptocurrency?
I think there's going to be a huge variety of vehicles, and it's not just one cryptocurrency. It could be the digital wallet we talk about. So I think there's going to be multiple platforms, but I just don't think it's going to be a cash form.
What are the dangers? So what do you worry about it as a banker in a cashless society? We've got lots of other things to worry about, but what?
I don't see it really as a major concern. I see it as a challenge. I mean, if we look at today, that there will be two types of currencies. Will be the digital currency and the crypto. But there will be cash, but it's not paper cash. Cash will be sitting on your mobile phone. Will be sitting on your iPad. So today, what we see in the new generation, the younger generation, I actually leave home now without cash. They just take the mobile phone or the plastic card. Let me just give you a quick story. My son just turned to 17 last year, and I was so happy. I thought I'll give him a card. I was so happy, opened an account for him, debit card. And then 2 weeks later, I said, "Are you using it?" He said, "No, I'm using Apple Pay and PayPal." So see the transformation of the young generation. They didn't ask for cash. They asked for Apple Pay, PayPal to top up. So from a banker, it's not about risk. It's about embracing and containing risk. Yes.
It's about adapting and changing to new attitudes.
Because the change coming so fast.
I mean, these cultural attitudes, it's a cultural thing now.
It's a culture,
culture.
Absolutely. It's a culture because a behavior as well. Today, if you go, for example, you want to buy a coffee, and you will see the cashier have all sorts of merchant devices. They don't want to take a cash. They prefer that swap your card and go.
Yes, I mean, the
So
old days
see
it
the
was the other way
mentality
around.
changing.
They didn't like to take your card. They
With
charge
the
you 50p.
contactless, the fractionless already happening, just swap your card and go.
Are there any, the world's changing, the millennials, they're just going to forget cash. What are the unintended consequences, perhaps, of all physical cash not existing anymore? Are there any
So
bubbles?
there is clearly the issue of anonymity, privacy, and kind of government or big brother oversight, right? There was this whole series of articles recently about some plans that China has in that regard, introducing more and more oversight of daily activities, this social score that they are planning to introduce. It's interesting how it will play out, right? Beyond just the cost of transactions, right, with which cash is zero for a regular consumer. I give you $100, we can do it all day long, exchange $100 bills. We still have, at the end of the day, still has someone has $100. If you do it with digital currency, that's not necessarily the case because there are some transaction costs with it, right? So borne by the recipient or the sender. But that can be possibly solved by some of the newer technologies. But I think this issue of anonymity and privacy is an interesting one.
And that's big, especially, of course, with data and data sharing and the impact. I mean, do you have any other unintended consequences in terms of?
I mean, as you become more digital in general in life, whether it's banking or otherwise, and it becomes more convenient, but you also become more vulnerable. That is the nature of the internet, right? The more of your life happens online, the more is susceptible to breaches, to fraudulent activity. So I think there's that question of cybersecurity that comes up when you're talking about increased electronic existence in general.
And while there is obviously a growing millennial population, there's also a growing aging population who are still sentimental about, keeping your cash in a sock under the bed to just in case. That'll be hard to let go of, I think, won't it?
Yeah, I think the unintended consequences could be the furthering of the gap between the haves and the have-nots. And I do think the downstream implications we haven't even thought of. I think we're scratching the surface on all of the negative downstream implications because we just don't have the capacity of thinking about them right now.
I mean, it feels like, and we mentioned this in our pre-panel meeting, and I brought up Donald Rumsfeld, who is always quoted on his unknown unknowns, but the way things are going, it is impossible to conceive. We could not have conceived of smartphones in the 1980s. It was beyond our mental capacity. So.
What is interesting though is the concept of financial inclusion and how e-banking makes it actually more inclusive. And you were talking about mobile phones. I was in Zanzibar last year and I was trying to buy a Diet Coke and I couldn't for the life of me find anyone to sell me a Diet Coke, but it took me 10 minutes to find a chip to put into my phone and get on the internet.
Yeah.
I think with banking it's the same. I think electronic banking allows people who couldn't have had access to traditional banking services and access to money and even microfinancing to now be able to become part of the larger global banking system.
And it's the emerging economies that have embraced mobile because they've had to, because okay, we've got our poll up here. Blockchain is winning, and cryptocurrency is kind of the same thing. It's the underlying technology. In what sort of ways, we talk obviously about blockchain and digital cryptocurrencies, but in what other ways is blockchain changing our world? How's it changing? How will it change your world? Sir?
I mean, blockchain technology,
Distributed
ledger. Let me tell you my views. Needs time to mature. Lots of banks in UAE and a consortium of banks have joined together and start testing the blockchain technology and transaction. We've seen here an aggressive move, an ambitious move from our regulator and EDP. The way I look at blockchain is that it will eliminate, which is the middleman, and banks will probably entertain and welcome that. However, not all banks will like that because it will reduce the fees. It will get rid of the fees and transfer money because you will be able to send money transfer through a very secure layer in a blockchain. So banks will benefit from blockchain, but not all banks will like that. Yeah.
No, and this gets us onto the winners and losers in this technological race. How are banks? Pavel, what do you advise banks on how to survive? And the traditional banking model, your fees are going to be slashed. Everything you do is commoditized. there's no place for banks in our time machine when we get there. There's certainly not going to be a branch we can go to and stick our card in, is there?
Maybe not as dramatic, right?
Not
So
that true.
one thing we
No,
do
it's
see
not that true.
a lot with the banks that really try to innovate out of this situation that we have in today, right, is that they're really trying to establish areas where they play in their specialty. And I mean it both in terms of functions and the products that they offer, but also in terms of the business processes, in the way they participate in this business process. With the open APIs, with these technologies, like the PSD2 directive, they know that they cannot hold on to the entire value chain the way they did in the past. They will need to open, they will need to allow other players. And those that understand it actually seek partnerships with others.
So partnerships are key.
Partnerships with fintechs rather than competing with them, right? That means they need to, as banks, they need to decide for themselves what is it that they will be doing very well and focus on that, right? So this is, then they have to look at the data that they own today. Data is an extremely important aspect of this whole discussion because at the end of the day, banks today have a trove of data that they do not use in the right way. They sit on it, but they don't utilize it. And so, some of them, for example, are looking at becoming basically very sophisticated analytical engines and driving new revenue streams out of the data that they have and the insights that the data contains and selling that on the market rather than, leveraging
Rather than doing the
balance,
traditional
right?
role, they can use the data.
Yeah.
I think what we need to happen with banks as a banker, if you don't take a bold strategies, there is no winning here. Banks need to start embracing fintech companies, and work together. Otherwise, banks will end up doing the back office work, and fintech company will come and steal the
take
show
it up. So
and
the
take all
value add
chance.
goes to the fintech
Absolutely.
startup
So I like to see more investment in a fintech company and embracing.
and embracing it. And Haji, your
Absolutely, and I think it's very exciting for us to hear, so I'll say that when we were speaking earlier, I think as a company that does innovation and as a company that has a platform actually for young startups to be able to build solutions and scale, I think innovation is disruptive by nature, and this is not just going to impact the financial sector, it's going to impact sectors as we move along. We saw it in automotive with Uber. The telcos had to deal with things like WhatsApp and Telegram and conversations happening on Skype. There was nothing they could do about it, and fighting it wasn't the right model. So jumping on the innovation bandwagon, investing in it and helping grow it should be the way forward. And I think we were having a conversation earlier about wanting to sit down next week and talking about how we can work with the banks. And we always say this to the banks. We say, we have created a platform for innovation. We want the banks to come and say, okay, we're interested actually in the fintech space. We want to learn more about how we can, build in it, and we want to work with the innovators, be it, Amazon Web Services or
I agree with
Microsoft
you
or
here.
themselves.
Banks should not look at fintech as a threat. 2 years ago, I said it in one of the conferences, we were paranoid that fintech is coming. But
going
today,
to eat your lunch.
exactly, today, I'm prepared to invest in fintech companies to be able to compete.
And is that investment, is that buying fintech companies, attaching them on, or is that coming up with your own division that does it?
It could be investment on buying companies, but will complement your banking services.
Yes, because at the end of the day,
You have to go buying banking, fintech, which actually today there is at least 2 to 3 fintech companies for every banking functions.
Yes.
So if banks want to invest, they have to invest in a fintech company, which actually in financial services.
So I think one of the things that we're missing in this conversation is why do the fintech companies even exist and why are they so popular these days? And it's really going back to the needs of the market and needs of the customer. What the fintech companies are doing is they're listening to what's happening to their customers and they're listening to what their customers need. Where the traditional financial institutions have not had the chance to customize a product or a service to maybe a smaller community. Either they are able to give one solution, one kind of checking account, or one kind of banking account, savings account, and they send it out to the masses. But that's not necessarily what the customers and this new generation is looking for. But then on top of that is entering into new markets. Customers who have never had checking accounts before or bank accounts before. We were just talking about in South America that women were not allowed to have banks or banking account. Now FinTech companies are listening to this inclusion and being able to offer up services that are more complementary to the needs of a woman and their women-run businesses or significant others of, that is very much meeting the needs of the customer versus what's being needed to make money as a financial institution.
So it's a fundamental changing of thinking, a more bottom-up. Would you argue, either Pavel or Sal, that banks essentially, like we even discussed before the crisis, banks became complacent. People in the old days, banks were a one-stop shop. You had your mortgage there, you had your bank account there, and they're just complacent, and these disruptors have come in and just provided what people need. And as you say, it's opening up more opportunities for women and
very healthy.
Financial inclusion.
I call it very healthy. I don't want to say it keeps banks on their toes, but it's very healthy.
Yeah.
So banks have to just take things seriously, to start to take bold decisions and invest on technology.
And we're going to see big banks not exist in 20 years. There'll be big names, we think, that won't adapt.
A good example of what Sue was talking about is the two Chinese giants of the e-payments, right? You're talking about no cash society, right? WePay and what's the other one? I forgot it. Never mind. Still, the two largest one that exist there are complete platforms. Including the e-payments, website creation, e-business, and they are so prevalent in the society that basically everybody's using them. That goes to that ease of use and responding to the client's needs. They designed it that way.
Just quickly before you move on, I think you mentioned that some of the big names, we're not going to see them. We're not going to see them around. We might not see some around. It's just like when Kindle came out, Barnes & Noble kind of went out of business.
Yeah.
But I think a lot of the big banks, actually, Barclays and others, are building fintech incubators within their businesses because they realize that they're going to have to innovate to actually stay relevant. And that's the model that I think accelerators and innovation platforms can bring to banks, is say, this is not your bread and butter, your traditional banks. Partner with others, whether it's FinTech Bay, which opens tomorrow, whether it's our accelerator, to come and say, work with these organizations to be able to innovate.
So how would that work with Amazon, for example, who offers, offering loans now? So I can get my loan from somewhere where I used to just buy books, but now I can buy gardening equipment. I can get a loan to buy the barbecue equipment that I've got from Amazon.
So I think the whole landscape is changing, whether it is, untraditional companies like Amazon offering up credit cards and being able to give out loans, these microloans. It's really about tapping into a market that had never been that traditional institutions were never able to exist or didn't care to enter into because of the credit risk, right? You're not planning on giving out a loan to somebody who's never had any credit before. Now it's tapping into that market using, which is interesting, in this survey, it's about blockchain, but the second is artificial intelligence, is how does that look? How do you look at the capabilities of what is the risk of giving out a loan to a student that's 22 years old, that has never had credit, but has a computer science degree, and that is the number one job that's out in demand? Is this person you want to take a chance at and giving out a smaller loan to?
But who makes that decision now? Does a robot make that decision? Is there an algorithm? Or do you still need, I think it's Handelsbanken have gone backwards. They now do everything via a local manager. And it's become very popular, even with younger people, because their parents see their children getting loans and they want a bank manager, they want an individual there.
So I think a lot of the fintech companies are already using a lot of the machine learning components and artificial intelligence platforms that are out there to look at predicting the earning potential for somebody rather than the backwards looking components of credit that's been traditionally done by financial institutions or traditional financial institutions. That's, again, going back to serving the needs of the market. And I think that is a risk that these FinTech companies are really taking on. And they're adopting all of the different components. Artificial intelligence was really, really hard to write, right? Now, with cloud computing and the fact that there is all of these engines and platforms that you can just buy into as a service. And all you have to do is focus on that really important IP aspect, which is your algorithm. Write the right algorithm. And if somebody can create the master algorithm out there, we'd love to be able to, find that regenerates and relearns and understands what was learned before.
Is that still a fantasy? So is that still a fantasy that there's going to be some kind of thinking algorithm that can make these kinds of judgments on individuals? Because beyond just what you're saying about, okay, they've got a computer science degree, but you don't know that person, you don't know how many parties they go to, how reliable they are, whether they're late for meetings, in a way that a manager, a human, can tell by instinct
But
as
data
well.
could probably tell you that soon. Data could probably tell you where he's spending his time, what parties he's going to, when he's sleeping, when he's waking up, through IoT, through data analytics, through artificial, through a bunch of things. I mean, so much of us has a footprint now that's digital that, I mean, maybe I'm thinking a little like that show, Black Mirror, and being a
yes,
little
well, that's good.
too dramatic here. But I think there's
conversation.
a lot that now machines, that's never going to replace emotional intelligence and empathy and all these other things that you need, obviously, to make decisions. But I think a lot is still is available now for computers.
On that note, actually, about bank managers, I might quickly get the second poll up, if we can, which is about the jobs most under threat. I'd be really interested to hear the panel's thoughts on jobs under threat, but because one of the big changes will be that jobs, one assumes with all new technology, will go. Obviously, new jobs will be created, but we've got here branch employees say all of the above is actually what people most say. Technology is going to remove the need for all these. Do you agree with that? Is there someone we've missed on there that is also something?
So the way this question was phrased was about removing the jobs.
Yes.
And there wasn't really a way to answer, modify or change the job, right? And that would be my option, because in fact I would argue that all of these jobs will continue to exist. They will just be changed by all these technologies that will be introduced into the banking and financial services. For example, blockchain, right? Blockchain will dramatically transform most of the business processes, but it will not eliminate them per se. It will change their nature.
But you'll need fewer people.
Yeah, possibly. But they may be doing other things in the back office. They may be doing other things in trading, right? So yes, they will be impacted, but not fundamentally eliminated completely.
I think this is...
Sure.
I heard once someone make an analogy that I think also fits here is when tractors first came out, a lot of people were complaining that they made farmers obsolete. But the farmers that were able to adapt to the change, which is always necessary, became actually much more efficient and better farmers. And I think in this case, a lot of these jobs are going to change.
Yep.
They're not going to necessarily become obsolete. And the banks that are going to be the banks that can retain their good talent are the banks that can adapt to that change. Now, yes, I know you're looking at me like, come on,
just want
some
to say
people are going to lose their job.
History tells us in great technological change that also, yes, farming became more efficient, but not before a lot of threshing machines had been smashed up by angry mobs.
Absolutely, but I think that is, in the sense, a lot of these jobs are not very, very basic jobs, like asset managers and back office and legal and compliance. These are transferable skills. These people shouldn't lose their jobs if the bank has been able to create employees with a toolbox of skills that are transferable. I came from the government sector. I worked in security for a long time. I'm working now in technology. I could have just, said, oh my God, what am I going to do? I don't know how to transfer these skills. I think that's the thinking that needs to happen, is that these jobs are going to shift fundamentally. How do we retain the skill set, the talent, and the human capital, and change what these jobs look like, but not lose everyone.
So I must let you
Okay,
in now, because I keep stopping you from
let
saying
me tell you something, and I don't want the crowd to be depressed. The future bankers, they're not the bankers of the day. Today, if you look at some of the banks, the Challenger Bank, Atom Bank, Monzo in UK, if you look at the staff, they're not corporate bankers. They are product designers, the social media people, the programmers. If you look at Monzo, which is in UK, mobile-only bank, look at their staff again. So what I'm saying that if we don't become agile, educate ourselves, embrace technology, pledge FinTech, our today's banker, they're not going to be the future bankers. And I'm saying it as a banker myself.
yes,
for
exactly.
35 years.
And all bankers should be saying that, shouldn't they?
Yeah.
And the ones
So
who don't
because
won't survive.
look at what's happening now in the FinTech world. All the new banks, the Challenger Bank, most of them, they are a different skills. Look at the skills today.
But such is life, isn't it? I mean, is the basketball player of today the same as the basketball player of 20 years ago? He's not.
Exactly.
Everything
Such is
evolves
life. I
and
mean,
changes.
people change. There is an evolution of that's a natural tendency, and I think with banks there needs to not be an anxiety about how everyone's going to lose their job, but rather proper thinking put into how we change the structures of our HR, how we change our processes to be able to account for these changes that are inevitable.
I mean, I was gonna save this question for the end, but it seems appropriate to ask it now. Jack Ma said at Davos that robots could replace 800 million jobs by 2030. And that in mind, what can we teach our children and our grandchildren now so they can compete with the machines in 20 years' time? What are we teaching them?
So it's interesting, I was just recently talking to a young college intern who is majoring in finance and computer science as a double major. And he said, I'm planning on dropping computer science and just focusing on finance and, potentially going to Wall Street. And I think that's going to change. I think you always fundamentally need computer science and programming, being able to write simple algorithms or simple queries here and there to do your job in the future. And that means marrying up liberal arts and fine arts degrees with technology in the background. It's going to be a different way of thinking. So all of the STEM classes for all, in the United States, the science, technology, engineering, and math degrees, those STEM classes, they have to be fundamentally not only in the beginning stages, all the way from kindergarten, but all the way to college and post-grad degrees. They have to be finely and intimately integrated in, but we can't lose the creativity component. And so I think they have to be married.
And
Barbara,
this is
what will
a
you
great
be teaching
example
your
of
children?
that is quantum computing, right? Which is coming in 10, 15, 20 years. It will be part of our lives. Studying quantum physics was reserved for just the very, very small segment of the population, right? Understanding what it is even all about, right? And it seemed like it's pure theory. Suddenly it will be here and big part of our lives will be driven by it. We better understand something about it, right? Which goes to what you're saying. The technology, same with blockchain, by the way. If you don't know, if you don't need to be a specialist, you don't need necessarily to program, those smart contracts, but you should understand a little bit about how it works, right? There's some 20-minute videos that explain it, and that's probably enough.
Because that's the thing. I mean, creative people tend to switch off as soon as you mention things like anything to do with science or physics or technology. Actually, what are you teaching your children and grandchildren?
I mean, I think I'm a huge advocate of traditional education because I went through that system and I think it did me well, but I don't necessarily think that it'll continue to be relevant as it stands today or stood 20 years ago to the future. I think there needs to be more focus not just on the content that we educate kids, but on the tools, right? So much more creative thinking outside the box. So focusing again on imbuing them with the kind of skills that are necessary for them to adapt to our increasingly global and transnational world, but also having the kind of skills that, as Sue mentioned, prepare them for a life where jobs in STEM are probably going to be a good chunk of the future, whether it's cyber, computer science, So I think there's a huge cultural component that maybe, especially in Bahrain and the Middle East, you still see, for example, we have an internship program that we run. And it's a pretty open internship program. Anyone can come into our offices and benefit from the young tech startups that we have and benefit from the work we're doing. And we increasingly see some people at the university say, for example, that, oh, we'll send you our top 3 students. And we're like, no, really send us everyone. And they're like, no, but we want to send you the top 3 students. And we're like, no, we really want you to send us everyone. Because just because the top 3 students are academically high achievers, and the others are not, it doesn't mean that the rest won't achieve in this innovation space that we've created.
Yes.
So I think that focus needs to change, and all of our schools and all of our academic institutions need to be much more innovative, creative, and steer a little bit away from like just focusing on just content.
Yeah. So what are you teaching your children and grandchildren?
I'm not going to teach them anything. But I'll tell you what. If you go to a restaurant today and you see parents with kids, and I'm sure everyone here notices what they do. They have an iPad in front of them.
Yeah, they're swiping always.
Yeah, and they put a movie. What does it mean? This didn't exist 20 years ago. You go in the airplane to keep your kid quiet, you give him your iPhone, play with your iPhone. So the education, the technology has already started affecting these young kids. I was the chairman of St. Christopher School in Bahrain for many years. The principal came to me a few years ago. He said, Sahal, I want to give an iPad for reception students and infant. I said, what do you mean? Are you crazy? They cannot write? Then I thought, wait a minute, I better do my homework. And I've done some research on the impact of iPad to kids. And I tell you, I'm glad I've taken the decision to allow them to introduce iPad in the school. And we have in St. Christopher now, everybody in the school have their own iPad. The impact on the kids, on technology, the exposure they have, is fantastic. Yeah. So to answer a different way, I think let your kids do what they like and what they love. And that's what's very important for them. And technology will come.
And it'll sort itself. It's a problem that is self-resolving.
Because we're living in a world today, you know. I mean, movie on demand, you open the TV, you download movie, Netflix, etc.
That's true. I mean, in the 80s, I could work the video recorder, but my parents couldn't.
I go in a plane with my son, he puts his headphone, I watch a movie on his iPad.
Yes.
He doesn't talk to me. So
well, this is changing people's. This will change society because we live in such an on-demand. Everything's got to be right now.
Absolutely.
Which I worry about.
But I think policymakers still have a role to play to be able to create the right environment, right? So, for example, just the fact that the government signed with Amazon last year, the Amazon Solutions Architecture degree is the most highly sought certification in the world today, right? But a lot of people in Bahrain didn't know that or didn't have an appreciation for that. But the fact that we have Amazon in Bahrain now, and you know the EDB is working with Tim Keen and working with other players, they say, look, this is an important certification. Let us make it available for Bahrainis because this is going to be a high-paying job that makes a Bahraini employable from the comfort of his room. That's a decision that policymakers make. And I think with education, yes, it's going to come and you have to be curious to find these things online, but there's still a role that I think the traditional educator can play, that the policymaker can play, that the banks can play, again, to make it more accessible for the students.
Yeah.
And this comes back to a point about inclusion that we were talking about. How can this technology make sure, Pavel, how can technology make sure that people aren't left behind? Mohammed Aryan earlier was saying one of his worries, one of the things he loses sleep over, is the people that have been left behind, and this has geopolitical consequences. It's very dangerous. How can AI, well, that's the wrong one, but AI and blockchain, how are we not leaving people behind?
Well, I think that, first of all, the fact that all this technology is available at a much lower price point, right? When I walk by the construction sites in Dubai, every single one of those workers has a sophisticated mobile phone to them, right? So that technology is available. The fact that it's getting easy to use, that at the end of the day, when it reaches the consumer's hands, it's something that, Sue, you were talking about, right? It's very easily consumable. It doesn't require all those skills that need to go into creating it or deploying it. I think those are two factors. Any others?
So I think one of the things that's going back to a couple of the comments made, central banks will have different types of responsibilities to the consumers and the constituents of their countries. The Federal Reserve Bank in the United States has a monetary education, fiscal education policy, where they actually teach people why the central bank exists, but also how do you learn about money, right? And cash, whether it's digital or paper and coins. For us, I don't think we do a very good job in the education system on teaching that as we all grow up, what's the financial responsibility. And I think these FinTech companies are catering to and needing that, where financial institutions in the traditional sense has done that, but it's not continual right now. And I think the central banks have an obligation to teach the citizens, the constituents, what monetary and fiscal responsibility is. So that's one component of where I think this is going to shift. I think the regulators and the regulated will have a much more close tie to better support the constituents.
Which in a developed economy like the US makes sense. What about emerging economies, the dollar-a-day economies? How are these people going to be empowered? And we talked about gender as well, women, and pulling people out of poverty through this technology. How do you see that being helped by?
I look at it, we have today 2 billion unbanked. Some of these people in the population are underprivileged because they don't have an ID to open an account, or they're sitting in refugees or farmers, etc. FinTech have accelerated to resolve this problem. The last 2 years, about out of 2 billion, the 700 million become banked now. So what's happening that the FinTech, by providing, I don't have my smartphone, providing an app, having an app, in Ghana today, I'll just give you a short story here. There's a farmer, lady farmer. She used to live about 300 miles from the nearest city to buy the seed, pay wages for her staff, and do the harvest. Her husband has passed away, and she lived with 3 kids. She needs to maintain living. There's a charity company called On ASA, which is, maybe some of you maybe heard of them. Went to a bank in Ghana and managed to give this lady, the farmer lady, an app on her phone. She ordered her seed online. She paid her staff through the mobile, pay to buy, through the mobile. And then she ordered her seed by coming, instead of her traveling for 300 miles. So look at the FinTech, how it affects financial inclusion.
If you extrapolate that out,
Look at this idea, fantastic idea, where you're changing the lifestyle of these people. So financial technology can make an impact and can reach financial.
Thanks. So unfortunately, we're running out of time, but what I would like to do is ask, I mean, there's so many other things we need to talk about, security, regulation, but I might ask the audience if they have any questions for our panelists now in the last few minutes. And there's a hand up just in front row here. There's a gentleman, there's a microphone coming your way.
When you talk about future of financial system and financial services, it's hard not to think about Facebook or Amazon or Google, because they seems to have a lot of information, data on us. So do you think it's a lost battle for the traditional banking system to fight these tech giants with a lot of information on persons? For example, if you take Zoo's example of a computer scientist, computer graduate, who is 22-year-old, has no history of credit, but probably Facebook knows more about that girl than a traditional banker. Your comments?
Would you like to comment on that? So first,
I mean, your question is that how banks compete with Facebook.
The Facebooks and the
I mean, let
Googles
me,
and
I said it
Amazons.
earlier, today Facebook have 2 billion users. And Facebook last year introduced the money transfer. What is these companies are missing today? Regulating, where still the customers, the consumer, there is what you call it security and behavior factor, which is Facebook cannot give us. Today, maybe majority of you probably feel more secure to put your money with a conventional bank. So the way we look at it as a banker today, I'm not going to fight with them. I'm going to try to embrace and work with this company. I can't remember the name of a bank, thinking maybe in South Africa. They're creating a new app which is competing with Facebook, social media. Why? Because they feel they want to capture this audience, capture this community. So my message here is that let's work with these people. Plug in Facebook to your banking application. Make it part of community. Why not?
In a way, Facebook needs to evolve. Facebook's had a fall in users
Exactly.
recently, so that is another.
Yeah.
That's these what we now regard as new industries are actually very old.
Absolutely.
They've already been
Exactly.
superseded.
Exactly.
Are there any more? Are there any more questions from the audience? Well, I might just ask one quick question then, just very quick round. We're in our time machine. We've got out. 20 years' time, will financial crises be a thing of the past? I'll start with you, Pal.
They will continue to happen.
Yes, definitely.
Yes, I think a financial crisis
Yes.
is
Thing of the past?
no.
No.
I think it's always going to happen.
I think crises are the natural state of being anyway, so I'm going to assume that the financial crisis will also be in existence in a few years.
We won't get rid of that. We won't get rid
Who
of human
create
nature.
financial crisis?
But I think
Human nature
Human
will
nature, so-
always win out.
I think in 20 years, we will be able to pivot and recover from those much, much quicker.
But we will. So we'll have financial crisis, but we will be able to recover. And unfortunately, as Lord King said earlier on, it's going to take us another 20-odd years to recover from this one. But that just leaves me, our time is now officially up. It just leaves me to ask the audience to give our panelists a very big hand. And thank you very, very much indeed for your fascinating insights. Thank you.